Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Steve Chiavarone with us with Federated Hermes. Thrilled he could be with us. You were just down in San Diego, Steve, talking to people trying to make decisions on asset allocation. How miserable are people?
Worried. I think you've got, and frankly, I don't mean to be callous about it, but it makes me like the market set up better today. Ironic, given the news flow we just heard, than where we were last November. The expectation set last November was unfulfillable. Whereas today, we've got a healthy wall of worry around resurgent inflation, hawkish Fed, tariffs, policy. And I think that wall of worry is going to get knocked down or taken down brick by brick as we get in the second half of the year. So more pain to come, but we see a much, much better second half.
Torsten Slack moments ago with Apollo just put out the states affected by tariffs. It's the usual victims, Michigan, Texas. I featured Nebraska yesterday, Indiana, Kentucky. Is Mag 7, Steve Chiavarone, is the technology excellence of growthy Federated Hermes, is it affected by tariffs?
It's not necessarily affected by tariffs in an extraordinary way. I mean, there is certainly some effects as it relates to chips and things of that nature. But if you think about it, if you were going to retaliate against the United States, you really can't do it in a general economic sense, right? If you're Canada or Mexico, where exports represent 25 or a third of your GDP, and for the US, those imports may be 3 or 4%, you're not winning that battle. Your only leverage, if you are a foreign country trying to retaliate against the United States, is to try to go after the Mag 7, where 50% of the revenue for some of those names are overseas. And so I think they are the obvious retaliation target if we're going to go down that route.
Steve, what are we doing with asset allocation these days? We sit back and we had such outperformance by the equity markets in 23 and 24. What are we doing with asset allocation these days?
Yeah, look, I think what we're in is a fog of uncertainty, which is what we're calling it. And it's an economic slowdown in this first part of the year. However, I think inflation concerns are overblown, particularly because the risks to growth, I think, are greater than the risks to inflation. I really don't care what Chairman Powell has to say. This Fed is cutting, and I think they may be cutting by the middle of the year. I think tariffs, for all of the concern, Paul, are going to end up essentially with the United States instituting a tariff level equal to the world's VATs. I think trade barriers are going to come down with reciprocal tariffs, and you're going to see U.S. barriers get up to about the level of a VAT. That's not the end of the world. You're going to get a tax cut package somewhere between Memorial Day and the 4th of July. And I think in the back half of the year, you're going to see cyclicals, small caps, and the short end of the yield curve rally. I'm not smart enough, clever enough, or quick enough to try to get defensive today and get bullish tomorrow. We're going to invest for that better second half.
Steve Chiavarone, one final question here. I think it's really, really important. The conservative client, they got a retirement plan. They're like Sweeney. It's a 501k. The thing's on steroids. Do they do something here? I got to do something. The news flow, I can't take it. Lisa Mateo gave me my first gray hair. What do I do? I mean, what's the to-do list for you and Federated here?
I think for a conservative client, one of the best things you can do is put together a portfolio that generates income. In my household, once a quarter, we get our dividend payment on stock that we have, and we call it dividend day. It's one of the happiest days of the year for my wife, 4 times a year, because that money comes in, and we're not worried about a share price, right? We're not worried about a stock being up or down. We know that the investments that we hold generate an income. And I think for clients that are conservative or tend to get skittish, having a portfolio that produces income that helps you to stay calm, because you know that check is coming in, and not overreact to share price movements, helps you stay invested, helps you stay long, and helps you not overreact to some of the noise that you're seeing in the political news flow right now. And I think that's the best thing you can do. You don't want to overreact.
Okay, Steve Chiavarone, thank you so much for the guidance there. And folks, this is a huge issue. We'll be covering this, of course, really into March get the jobs report coming up, Paul, but I'm sorry, asset allocation, what do we do?
Yeah.
Some people are saying do nothing.
Yeah.
We'll have to see.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
This is joy. I had absolutely nothing to do with this. I think Eric and the interns figured this out. And I just want to take a moment here. People on the East Coast have absolutely no clue the academic heritage of far Western Canada, including the University of British Columbia. It is, I learned this years ago, it is just wacko how good the economics is. She's out of that combine. Katharine Neiss joins us now with PGIM as well. Like econometrics and trade economics, it was like absolutely definitive in my youth. Continent of Europe is what you focus on. Is it blowing up this morning? I saw Italian-German spreads really didn't move. It's a one-off lift, isn't it?
Yes, I think what we're seeing is in some ways a quote unquote, good move in an orderly move in asset prices. I think markets are taking this very positively. It is, I see it as a third in a row of Draghi's whatever it takes of the next generation EU announcement in July 2020.
Right.
This is big. This is huge. When I first heard these numbers, I was like, this is a go big or go home number.
This is a huge deal. Now, you and I studied Dooley Garber Folkerts Landau, David Folkerts Landau at Deutsche Bank years ago. Like the day Putin invaded, Paul, Folkerts Landau told me the fiscal sphere, the space in Europe will never be the same. Culturally, are the institutions there, BNP Paribas, the entire structure of Europe, are they ready for this non-austerity?
This is a great question. I mean, it is a big move, but one argument that I've made a long time in Europe, we're so used to having this narrative following the sovereign debt crisis that debt is a problem in Europe. We think about Italy. More recently, we think about France. But if we look at the EU as a whole, or even just the euro area as a whole, debt to GDP is very, very low. It's much, much lower than any other comparable economic region, either in size or level of development. It's at the EU level, it's 80% relative to GDP. So it's way, way lower. They have loads of fiscal space. The issue for Europe is not the lack of money. The issue in Europe is not the lack of, general consensus about how these funds should be spent. The problem in Europe is there is no fiscal mechanism in place to allow this spending to happen. So what is so important about this signal that we're seeing from Germany is not just the size, but what it means for Europe working together, having leadership in its largest, most economically important economy in terms of going forward. And I think everything else, provided this is planned and executed, properly, there are risks clearly around doing big stuff. I think everything else is going to fall into line.
Tom, that answer just doubled my knowledge of what's going on.
Oh, this is important.
I'm learning so much
Paul,
here.
I want you to jump in here, but I sat with Lagarde at Jackson Hole. Sure, people called me up and said, this is a huge speech. Catherine, is that your phone? It's my phone.
No.
Hold on, let me see. Oh, it's Air France.
Your first class seat is available.
I never have this is the first time that's happened in age. It's your fault. Lagarde is fired up. Oh, that's KLM. We're doing great.
Exactly.
Paul, save me here. But Lagarde's fired up about this.
Amazing. And Katharine, in your notes here, I love this. The German spending plan is a game changer, a fiscal bazooka. Earlier expectations of a $200 billion defense bill were completely surpassed. So just putting into context, a huge announcement by Germany as it relates to spending. Will the rest of Europe, will they follow? Can they follow?
I think they're going to have to follow. I think it's going to be a multi-pronged approach. We're going to, get some announcements today. What I would say is a lot of these announcements coming today are, these are quote unquote easy. They are politically easy. They are financially easy for them to agree. It doesn't require, for example, unanimity at the EU level. These are announcements that I'm expecting today that are more in the incrementalism bucket. So if we want to see another big substantive move from here, I think what I would be looking out is, one, we need a signal that the EU, not Europe, but the EU is actually politically aligned and moving forward. That doesn't necessarily mean they've got to agree Eurobonds, but right. I want to see them smash some old chestnuts here along the lines of banking union, along the lines of capital markets union, because no matter how much public money they throw at this, it's never going to be enough. You need private money, and you need the signal that politically they're working together.
I got 8 questions, including how she fixes the Toronto Maple Leafs. Katharine Neiss, this is brilliant. And what I think we need to focus on in the time we've got left is what's it mean for Americans? Because the risk here is they're 80% GDP. Are they going to become like us with a out of control debt and deficit? I mean, is that the fear, the pushback that Europe's going to see?
That risk is always there, but there are mechanisms in place. We have these new fiscal rules at the EU level. Some people say, they're not really very, very stringent, but I think the proof is in the pudding. They have been pretty effective if absolute debt to GDP is only 80%. So, my guess is they are going to handle this in a way that is constraining.
Here's Lagarde when I was with her in Jackson Hole. This is Maynard Keynes, quote, "The difficulty lies not in the new ideas, but in escaping from the old ones." Brilliant. To Paul's good question, is Finland ready to escape the old ideas and become like America with a pop and nominal GDP and all the other things?
I think Europe is ready to move forward. I saw, excerpts from the Munich Security Conference. We saw White House press conferences. I think from the perspective of Europe, this was a game changer for them. This really shifted. Going back to these German numbers, going into the weekend, the numbers were 200 billion for a defense fund only. Then on Monday, we heard 400 billion for a defense fund and 400 billion for infrastructure. Then we heard 500 billion for each of those. So
sounds like
this
America.
thing grew literally in a matter of days.
Across the nation and around the world, and particularly to those of you in the continent of Europe. Katharine Neiss with us with PGIM here, a brilliant conversation. This is what surveillance is about. We welcome you on your commute across America. And of course, we say good morning on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. Paul, this in 30 years, Paul, this is a new conversation with Dr. Neiss.
And Katharine, talk to us about just the political support, the popular support. Is there that support out there across Europe for this new way of thinking about spending and maybe having to take a bigger role in defending themselves and what that costs?
Well, I think it tells you a lot, about where we find ourselves now. If you said we need to increase this defense spending with 1-for-1 cuts in the social safety network, I think you're going to come up against a lot of resistance, which is why we've ended up where we are, where the easiest flex point has been increasing debt and doing this through debt financing, because there is that resistance. But I think the reality is that over the course of time, slowly, some of this social welfare network is going to need to be reined in. And it comes back to your point about debt sustainability. So, for now, this is this extra, sludge of money over and above, but ultimately is going to have to come at the offset of something else.
The ambiguity here, and this goes back to Stiglitz, folks, not his Nobel Prize, but Stiglitz looking at the little g, the growth rate here. The American bargain has always been, we will grow our way out of our debt. Do you see a new nominal GDP, whatever the mix of it is, in Europe, where they become more like America and they get the little g to cover for the debt expansion?
I absolutely think that this is possible. And why do I think that? Firstly, demographics is not destiny. If I look at what's going on in Japan, it's remarkable. Japan grew faster in the fourth quarter of last year than the United States. This is a country that's facing a significantly, dramatic and dramatically different demographic headwind than the United States. And it's because they took a very long-term strategic view, and they have invested, they've increased labor market participation, they've improved productivity. And so you can get growth. We're also seeing early signs in that the European periphery, on the back of these next generation EU investments, that potential growth is starting to pick up. We're not talking anything huge, but a couple tenths is actually nothing to sneeze at if you accumulate that over many, many years. So I don't see any reason why Europe cannot grow. Germany did actually grow on average by 2% GDP real on average every year in the decade before the financial crisis. Now they haven't grown at all since 2019. That's not normal. That's not normal. So I think there is absolutely scope for them to grow.
Paul, get a few more in here. We've got someone who slumped in from Germany we've got to talk to.
Exactly. So in terms of Germany, how is the market viewing, or Germany and broader Europe now, is this increased acceptance of higher spending, is it seen as pro-growth? Does it raise inflation concerns? What are the markets telling us here?
I think the market for now is working on the assumption that this is a positive for growth.
I
that this
agree
is
with
going
that.
to
I
be
looked at a lot of charts today, and the yield move is contained.
Yes.
Cultural, this is critical for PGIM. If Greg Peters was here, this is the question he'd ask you. Is the institutional integrity there to sustain European business so they don't disinvest or halt investment?
Well, this is why I think, in addition to this, big fiscal bazooka, I want to see a strong signal from the EU level that leaders there are working in unison, that they're willing to take hard political decisions that, are going to go against some vested interest to move forward. I want to see that signal. We haven't seen it yet. What we're going to hear today is not that signal. It needs to be more.
ECB, just out with the headlines, the European Central Bank says rates are becoming meaningfully less restrictive. Is that a societal less restrictive, or is that a growthiness imploding?
So, you asked the great question before. What does it mean for the ECB? This is a complete flip. For so long in Europe, it was really monetary policy that was leading and fiscal was lagging. And now fiscal is firmly in the driving seat, and the ECB is going to have to adjust to that. Okay. I think at the margin here, it's going to raise their, or at least put them at the top end of neutral. So yes, I was expecting this cut today. I think they probably will cut one more time, maybe later this year, but that they sit at that top end of neutral of 2.25% by the end of this year. So they are going to be more cautious. And of course, they need to see what this all means for the real economy. And it will take time, right? This stuff's not shovel ready. It's not going to impact on GDP on day one.
This is wonderful. Katharine Neiss from London visiting today with PGIM Fixed Income.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'll cut to the chase. At La Tour d'Argent this afternoon at lunch in Paris, overlooking the brand spanking new Notre Dame. You're going to have a fancy lunch with seasonal duckling. On we go to the crepe Mademoiselle. What do the fancy people of Europe think of this world turned upside down?
Definitely there is a lot on the plate, and what we see is, on one side, some countries that have the fiscal space to go bold, notably Poland, Germany, some others that have not. So Macron probably now is taking the lead, and this is something that, honestly, it was back at 2017 when he said, we really need in Europe to speed up and get some defense spending. So probably is going to lead the queue, and we will get there. I don't know how much and how fast, but this is the final destination.
I mean, this is a sea change for both the U.S. and Europe broader defined. If there's going to be a lesser role in the U.S. across Europe, That means obviously the European countries need to step up, and we're seeing that at the EU today. What does that mean for investing? How has that impacted your investment outlook as you think about allocating capital across the globe?
Well, the big question is how this is going to be financed and how this will have an impact on growth, because it is a structural, it is a permanent increase in expenses. And this is why I believe we are seeing the bund going to the sky. This is what worries us at the moment. So I would say that for the time being, nothing has been approved from the parliament in Germany. So the situation still remains quite fluid. So we take hold staying cautious on the risk asset.
If you were at the Lagarde press conference, what question would you ask the head of the ECB?
Quantitative tightening. What are you going to do on that? Because on cutting rates, this is something that was consensus view, but on QT...
Yeah, it's old news. I find this absolutely extraordinary. How should the United States respond to this? Is all of a sudden Europe our destination for marginal investment? I mean, at Amundi, what do you tell American clients today of the action of the White House that has changed this whole dialogue?
Well, to us, it really goes back to the consequence on the asset classes, so on rates, on the currency, so on the US dollar. Honestly, we are short the US dollar, long the euro, because we do expect the US dollar to progressively depreciate. In the past, it was because of the Fed. We thought that the Fed action and the asynchrony between Fed and the ECB would have led to depreciating currency. But this is what I think the U.S. administration wants. They want a weaker U.S. dollar.
Yeah. Just looking at the German 10-year Bund, just since February 28th, when was it 2.4%? We're now at 2.86%. So big move up in German yields. Is the expectation with you and your clients and investors in Europe that this backing away from austerity is a good thing for the European economy?
It is, as long as the increase in the debt spending goes into improving growth. So we are talking about a country that has a 63% debt to GDP ratio, which is honestly, it's not an issue. This is Germany. This is Germany.
U.S. over 100 now. Yep.
But I'm talking about Germany. So if on spending on infrastructure, this is going to be growth constructive. On military expenses, the multiplier might be a little bit lower. So
I got to get this in. I mean, we're going to go to the news here in the United States, Monica, but I think this is just so important. So Spain expands their debt. Germany expands their debt, which is like Mississippi expanding its debt in Michigan. To Lagarde's point, where is the fiscal union that will affect this efficiently? I don't see it.
Well, what we need to understand is how the framework will be fully deployed, because if it goes down to the nations, this is where the issue will be, and not all the countries will spend at the same size at the same time, just because they have different needs. So the issue might be eventually to have an unbalanced Europe with some countries that have been spending more, Poland, Germany, and some that have less room. Let's see what the Commission today will vote on the escape rule, just to allow some more space to the countries, to the state members.
So if we ever do a remote at La Tour d'Argent, right there in the front overlooking the river, can you join us there?
Sure.
Yes.
It'll be like lunchtime in Paris.
Exactly.
We could do that.
We can lunch in Paris.
We could,
Italy's better, though. The food is better.
Well, we'll do both. We'll do the deck of the Hassler, and then we'll do La Tour d'Argent in Paris. Lisa, it's perfect. Mana Defense, travel guide for Europe. Thank you so much. Head of Amundi Investment Research.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Now a 4-hour conversation with Henrietta Trey. She's been so kind to be with us on like a 3-day basis here with Veda Partners. Henrietta, I actually do have a countdown clock going. For the first time, we're 8 days away from March 14th. Within the halls of Congress, Democrats and Republicans buffeted by the cacophony of news. What's the path you see to, I believe it's March 14th at midnight?
It is March 14th at midnight, but on the House side, it's really March 12th because they are going on recess on that day. So what it looks to me like is the House Republican Conference and the Senate Republicans are really trying to jam Democrats here by putting a bill out at the last minute that they will not support on the House side, but then Senate Democrats would be forced to support and vote for sometime midweek next week around the 11th or 12th. So they're really cutting it down to the wire. And we've increased our odds from 20% to 25% that we might see a shutdown next week as a result.
Okay. So they shut down. And let's say since they're on recess, they shut down for Friday, Saturday, Sunday. OMG, Monday morning, they reopen. Is that the scenario here, Henrietta?
Nope. They're also on recess the next week. So it would be a shutdown of, at a minimum.
Well, does an adult in the room say, hey, everybody, on recess and get back to work? Has that ever happened?
I'm sure it has happened in history, but it's not something that usually does occur. That's sort of why my odds are relatively low that we see a shutdown is because they usually develop a last minute solution. But as for strategy right now, Republicans are not in the room with Democrats. They are in the room with themselves trying to jam Democrats. And that's going to come into a math problem when we get over to the Senate and they need 7 Democratic votes to keep the government open. So it's sort of the run up to the 11th hour right now.
What have we heard from the White House in this whole process here?
The White House, and by that I mean Elon Musk, who was with House Republicans yesterday and really trying to figure out how to get the Doge cuts implemented into any kind of permanency. We're seeing cuts across all kinds of agencies. Trump is planning to announce he's shuttering the Department of Education later on today, as I think y'all reported. They're working just with Republicans and really enjoying this situation where Democrats are just being whipsawed back and forth with no clear direction on how to combat them.
So talk to us about, you've mentioned in the past, Henrietta, about the Democrats in this budget process may be the time when they can actually step up and be heard here, because it seems like President Trump and to a lesser extent Elon Musk take all the oxygen out of the room. Is this an opportunity for the Democrats to step up and assert some leadership, or at least their position?
It's definitely an opportunity, but as yet they do not have a clear and unified path forward. So right now their ire is all focused on Doge, and it seems like the main concessions they're asking for is cuts to Doge. But as we saw in the wake of the State of the Union address earlier this week, the Republican voter base really supports the idea of Doge, even if they don't support the actual cuts that are coming. So Democrats are having a hard time coalescing around how exactly to rein Doge in and get the voters behind it. They don't like the cuts, but they haven't identified, a clear flag that they can wave that can get Trump to move off his position.
In all your Henrietta Trey's brilliance, I mean, you said, I believe the Senate, 7 Democrats have to vote with the Republicans. Is that what you said?
Yep, but this has to get 60 votes in the Senate side.
Why would they? Why would any Democrat now vote with the Republicans?
I completely agree with that assessment. The question is whether they can stomach shutting the government down. And the way that Trump is going into this.
But to be cynical about it, isn't that what 1600 Pennsylvania Avenue ultimately would like?
Exactly. And so this is sort of playing right into Trump's hands. Democrats' threat is to say, if you don't negotiate with us, we will shut it down. And Trump's effectively saying, and so I don't care.
Jeez, that's where we are. Hey, let's just switch gears a little bit, Henrietta. Veda Partners, you guys have a tariff odds tracker. A, what is it? And B, what's it telling you these days?
Oh, sure. Our clients are all hedge funds, and they want the quick and dirty of how things are working and what we're expecting. Everybody's just trying to wrap their arms around the realm of the possible. And so when we put our odds tracker out, we cover a whole host of different components. Odds of tariffs on China, virtually 100%. Obviously, those are going into effect. We're at 20% now. Odds on Canada versus Mexico are slightly lower. I think the odds of EU auto tariffs have been and continue to be very high. And I want that to be really clear cut every time we talk to clients. EU auto tariffs, I think, are coming. There's a perfect catalyst for that on April 1st. The March 31st deal that Ambassador Tai negotiated with the EU and the under the Biden administration expires on March 31st. So April 1st is the date that Trump used in his America First trade agenda, and it's not coincidental. It's exactly in line with the expiration there. So our odds tracker really just tries to get to the heart of the matter. Tariffs are coming. They are in place. There might be some staggered effects, but they are coming.
Henrietta, thank you so much. Just treasure the frequent visits. Henrietta Trey's expert on all this with Veda Partners.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The newspapers, the headlines. She reads 20 of them to get ready for this. Lisa Mateo joins us. What do you got this morning?
All right, well, starting with the Wall Street Journal, because it has a look into how more Americans are relying on their 401k as like this rainy day fund. And they're using it to avoid things like big things, foreclosure, to pay medical bills. This was according to Vanguard. So the number is 4.8% of account holders took early withdrawals last year just for those reasons. So it was a record high. But they say why it's happening more is because more employers are automatically enrolling their workers, and some of them, have little savings to begin with. So now part of their paycheck is going into this other savings, and now they need to use that to help pay for these other things.
Peter Orszag owns a high ground on this. He and I have argued about it. I'm pretty firm here on there should be no withdrawals. It's a siren call. Everybody does it, and it makes no sense in terms of the actuarial assumption and the failure of our retirement system. What do you think,
But
Paul?
then where do you go?
Yeah, I don't know. You have to do 401k because there's no such thing as a pension anymore.
Right.
So all the Sweeney offspring are working. They're putting their max into 401k and just having to deal with it.
And the mat, at least folks get the mat, but at least it's a huge deal
For the contribution.
It is
it's
because
just
people are strapped for cash. And if you want to do something, buy a home, you need something, like you really want to do it, you don't have the money, so where are you going to go? You go where you actually do have it in your retirement?
And people are living longer.
Boston College has great work on this. There's a tip point, 42 years old.
Yeah.
After 42 years old, people are like, oh, I'm getting older. Lisa, you wouldn't understand this. but those under 42 like you are just like, well, I don't care. I'll take a loan out. Nobody cares. Next.
Okay. This one, I'm biased.
Before I get a gluten-free coffee donut thrown at me.
Yes, thank you. I'm a little biased on this next one. So Dwayne "The Rock" Johnson is back on top as Hollywood's highest paid actor. Okay, get this. 2024, $88 million. This was in Boardroom. If you go on their Instagram page, it's all written down. So why? Okay, he pulled in $50 million from Red One. What I could barely sit
You're
through.
the only one who watched it. East of the Mississippi.
He's a voice act. It's a voice thing, right?
No, that was a lot. Like he was actually an actor for that.
Okay.
That was for the Red One.
Okay.
So it was like the biggest fee plus buyout deal streaming history. Okay, so put it there.
All right.
Then we get to Moana 2. I mean, that's where the big money was too. It switched from the TV series theatrical. He got a big cut of the box office as an executive producer, and that doesn't really happen. So that's how it came down to all that
2
money.
Passed $1 billion.
Oh, yeah.
Box office. You saw that coming.
Most definitely.
He could buy you a Birkin bag.
Yes.
He can buy me like 50.
Next.
And finally, this one, I'm pulling an audible. I'm moving this one up for you, Tom. The CEO of Air France, he sat down with the Financial Times, right? And he said that they are banking on wealthy American tourists who spend on fashion brands, hotels in Paris to help them recover from this tough year, okay? He said they're shifting their business model to focus on this premium end market. So he gave an example. He said some Americans are paying as much as $50,000 a night for the biggest suite of the Bristol Hotel.
Yeah, I'm right there.
You go for if you want the cheaper option, it's $2,000 a night, Tom. So that's a bargain.
I just booked the last week of the year 2 weeks ago.
Okay.
And I was lucky I got a room. That's how bad it is. I will
Paris,
say this.
where are we going? Rome, Paris?
Paris,
of course.
Paris.
Okay.
Paul, is this about the European planes, not just Air France, or is it about how uneven the service is on the American planes?
Yeah.
Which is, I don't have an opinion.
I don't know, but
Interesting.
I think that the business class over Europe is from the American Airlines is good. They got the lie flat beds. Have to get that. But boy, they charge for that.
Yeah. And what about the airline tickets? Because Tom, do you know Air
They've
France
gone
is
up.
they're charging $24,000 for a return first class ticket between New York and Paris. That's in April. Can you believe that? Wow.
Thank you, Lisa Mateo. I hate you. Mrs. The Rock, I mean, 88 million.
Sure, he can afford it.
Okay.
He's not flying commercial.
Lisa Mateo, thank you so much on the newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.